It's the first week in 52 weeks that active inventory has increased. Have we started a return to normalcy in the real estate market? That's what we'll look at today. It's Monday, April 19th, 2021, and this is your weekly look at the Altos research data that came in over the weekend for the entire US real estate market. Each week, Altos tracks every home for sale in the US, all the pricing, all the changes in pricing, the supply and demand, so that you can see the trends in the market before it becomes available through the traditional media channels. 312,000 single family homes active, unsold on the market. That's an increase of 1.6% over last week. Big sigh of relief. You can see on the very right end of this chart a tiny uptick. So what does that mean? Well, as I've been saying for a while, this hot demand has delayed the normal seasonal second quarter inventory cycle by a month. Normally by mid-March, inventory is climbing by mid-March in anticipation of like the peak buying season. This year, of course, Americans are buying everything in sight to take advantage of the ultra low interest rates before they climb. And since rates were at their absolute low point in February, buyers through March had locked those rates in. Buyers in April are financed with 50 basis points higher mortgage rates at 3.1% or so. Mortgage is still ultra cheap. So the buyers haven't really been deterred, maybe just taken the edge off the ultimate frenzy a little bit. If you've watched these videos with any frequency, you'll know that any signs of return to normalcy is actually encouraging. It's healthy to be in a better place for buyers and sellers. Immediate sales were also up this week. This is, remember, the measure of those getting contracts and getting offers and going into contract right away. With over 26,000 of them listed, sold, and going into contract in a matter of hours or days. By this measure, you can see that the frenzy is still totally underway. The total listing, new listing volume is climbing though. And so fingers crossed that it keeps heading up through the quarter. We want more inventory options for buyers, less insanity in bidding wars. We want time for appraisal values to catch up to the market. Home prices are up again this week. No surprise here. The prices should keep climbing until the normal peak of the cycle, June 30th. Last year, of course, was unusual in that the market didn't stop climbing till several months later. It'll be fascinating to see this year if the cycle happens on a normal schedule or if the pandemic cheap money phenomenon keeps us, in some kind of new normal. My guess is that with schools and work generally gradually returning to their normal cycles, the home buying season will also return to old patterns. The median price of single family homes this week is $380,000. That's up 17% over last year at this time. You can see in the red line here that last year the prices were still somewhat depressed from the beginning of the pandemic, but they had also already turned higher. By mid-April, the American consumers knew exactly what they wanted. They wanted to buy a house and they did not care about the pandemic. I remember being a little shocked that this was happening. But by the end of April last year, it was pretty irrefutable. And by the way, those kind of counterintuitive market moves are why using a data set like the Altos set is important. Last year, the traditional housing market forecasters were still calling for like a 10 or 20% price decrease And they were calling this like well and through the third quarter based on things like GDP or employment rates. But looking at the real time data, we could see that that was not at all likely. So even if we're totally caught off guard by the data, at least we're caught off very quickly. When this boom ends, you'll see that in this data set here first too. There is a class of market watchers right now who see bubble conditions. The overbids in the really competitive markets are particularly scary on this front. In my experience, the difference between a bull market and a bubble market is actually the level of fraud or quasi fraud happening. As far as we can tell, the levels of fraud and suspect deals right now is actually very low. These are real buyers who are well financed using lots of cash with great credit scores. But one of the metrics we watch to see if the market is continuing to pick up steam or is actually letting off steam a little bit is this percentage of homes with price increases, percentage on the market that have increased their price recently. Well, so it's right now it's super high. It's over 7%. This number is slowly ticking down. This means slightly less investor speculation and very low levels of things like distressed deals. There are no distressed sales because of the foreclosure moratorium, but also because Americans have massive amounts of equity and cash. So the speculators actually seem to be getting squeezed out of the market by actual home buyers. So this number shows us hot demand, big hot market, but gently easing back on a seasonal schedule. In other words, no bubble to burst at this moment. We will keep our eyes peeled on this data in particular, the percentage of homes with price increases, for signals if that changes. That is all the data we have time for this week. As always, subscribe to the YouTube channel. If you are a real estate professional and you're working with buyers and sellers, especially right now, where we may be seeing some signs of peaking, and you have people worried about the timing, whether they should wait or whether they should hurry, I recommend that you go to altosresearch.com and just book a demo with us. And so we can walk through the data in your market and talk about how to really help your buyers and sellers right now. Okay, more next week.